Hello, everyone, and good morning from New York City. Thanks for staying tuned in to the Banking Revolution Conference. For those of you just joining us, my name is Yamani Moiz, U.S. banking correspondent for the Financial Times, and it's my pleasure to introduce our next panel, which is all about collaboration and, of course, sometimes competition between fintechs and the traditional banking sector. First, we have Mary Ellen Iskandarian, President and CEO of the Women's World Banking, Mark Mullen, CEO of Adam Bank, Rita Martins, Head of FinTech Partnerships at HSBC, and Stefan Schick, Director of Business Operations and Global Partner Management at N26. Welcome, everyone. Let's kick it off. Mary Ellen, I'll start with you. What do you think makes a bank fintech partnership successful, and when are kind of the entities better off on their own?
So I may have a slightly different perspective than some of my fellow panelists. I'm delighted to be with you here, though, Imani, both of us in New York, but maybe different ends of the city. What we're very excited about with bank fintech partnerships at Women's World Banking is the opportunity that fintech has to reach underbanked and underserved populations, particularly given our name, particularly women who are disproportionately underserved by the financial sector, and then being able to reach these women and other underbanked folks through the scale and platform that banks can provide. Fintechs very often are not regulated, so they're not able to take savings. We know that one of the things that women most want in joining the formal financial sector is a safe place to save. So there are lots of reasons why true financial inclusion can really be spurred, can be turbocharged, if you will, by bank and fintech partnerships. I know we're going to be getting into conversations about why they may not have always lived up to the promise. I think the one thing that we are seeing, though, with many of the fintechs that we've taken investment stakes in is a very strong commitment initially to reaching underserved populations. They see that as a real reason for having developed a business model. But as they grow, as they move into a Series C plus equity round, the demands of scale become so great that they may not necessarily be quite as focused on that original financial inclusion or more inclusive personnel. So I think I'm not necessarily sure the fintechs are better off on their own, but certainly being able to have a conversation with capital providers about the business case for inclusion, the business case for scale through reaching these underserved populations is an important one. And I would really regret if all we saw after those partnerships were fomented was a falling away of that original purpose of greater inclusion.
Definitely. And Rita, I'll come to you next, but as head of partnerships at a large bank, what are you really looking for in a partner, and how do you determine when to kind of seek an external solution versus building something yourself?
So as a big bank, we really have some of the technologies and the capabilities internally. So we always, like you're just saying, Imani, we always have to think around, do we build it internally or do we go and look for a partner that can do it? And as a partner, my team typically looks into 3 dimensions. So the first one is really the technology. So do they have something which is very innovative, that it's already built and it has already been proven in the market, so it doesn't make sense for us to build? The second one is the people. So do they have people that really could collaborate with us, that really works together with our own resources? Because at the end of the day, it's interesting, but partnerships, it's very much about people as much as it's technology, because 2 different peoples will have to work together. And the third one is really the vision. So what is the vision that they have for the company? There can be something very innovative currently, but are they still going towards that innovative in the future, and how they're thinking about continuing improving the product? So for us, we're really looking for a partner that can really complement us into some of the areas that we don't have, because they bring that nimble side, that innovative side, that we definitely want to leverage for sure.
Thank you. And Stefan, from a fintech perspective, I mean, what should fintechs really be looking to gain out of a bank-fintech partnership? And when is it better, maybe for competitive reasons, to, I guess, stay away from that?
Yeah. So first of all, thanks for the invitation. And maybe to also clarify that N26, we literally have a bit of a dual perspective, as we are on one side a bank with a full banking license, a full European banking license. On the other hand, we're like an innovator, and we want to create and design a very easy to use bank, a bank everyone loves to use. And so being a bank, we obviously cooperate and partner with a lot of fintechs, with a lot of smart, startup companies as well. On the other hand, being an innovator ourselves, we also rely on incumbent banks and on other partners like MasterCard, where we, really want to, revolutionize payments, where we want to do payments way easier for the consumer. And I believe, if you look at partnerships between innovators and incumbent banks, I think it can really work. And we see it in N26 that it does work. I think it's important to see that you have a similar understanding of what you really stand for. Like, what's the value you want to give to customers? How do you define the customer? Like, do you have like a customer centric approach? What's the innovation? What's the service you want to give to customers? So it's important to have really the understanding of what this partnership is for. Then obviously you have to have the cultural fit. So we know that between innovators and incumbent banks, there can be big differences between how you do business, like an innovator and startup or scale up, very fast, taking risk, looking at processes in a very lean and smart way. Whereas the incumbent bank, is probably focusing more on the process, like on regulatory and so on. So there has to be a cultural fit. And last but not least, we also see that there has to be a technical fit as well. So in other words, if a bank wants to partner up with a startup, with an innovator, you have to make sure that like systems can talk to each other. You have to make sure that the right APIs are there. You have to make sure that systems work on both sides. So we believe big time that partnerships between banks and innovators can perfectly work. And I think we're a good example from both sides. As I said before, like we really have this hybrid perspective, because we're a fully licensed bank, but we also like an innovator and startup company.
That's a great point, and we'll talk more about kind of the technical differences in a bit. But first, I want to go to Mark. How are you thinking about partnerships at Atom Bank?
So thank you very much. Very sensible comments made already that I don't want to repeat, but a couple of observations, if I may. The first one is very basic, right, which is clarifying at the beginning who owns the customer. And that's particularly important dependent upon what type of partnership you've actually got. So it's sort of easier if you've got something that's sitting in your supply chain, a piece of, if you like, technical capability that is obscured from the customer. But lots of businesses are competing for customers, for ownership or sovereignty of the customer. And it's pretty important that you understand that up front, because the customer is not a commodity to be toyed with. In other words, nobody gets a piece of the action. You've got to respect their individual sovereignty. And it obviously also determines the answer to whether you're competing or collaborating often. Because, lots of investors, for example, expect businesses to go out and own customers and build customer affiliation on a direct brand basis. And that's sometimes at odds with sort of fintech strategy. The second, maybe obvious point, but it's one that maybe a few hard lessons have taught me, is that I've often heard it said that a great contract is something that you put in the drawer, you lock away, and you never have to read. And I think that's absolute rubbish. A great contract is one that sets out the expectations of either party really, really clearly. A great contract has got very clear remediation for when things go wrong, because things can go wrong through nobody's fault. But these are not friendship relationships, they're professional relationships, and they need to be able to withstand pressure and stress, which is not to say that you won't fall back on good culture and you won't fall back on good management and good discipline. But at the end of the day, the contract is there to protect the partnering parties, as it were, from things that go bump in the night, things that go wrong, whether you like it or not. So I'm a firm believer now in making sure that you anticipate as much of that up front and you enshrine it in a contract as you possibly can, because it's just protecting everybody.
Thank you. So now let's go back to the topic of differences. I think I've written about some of kind of the cultural differences when it comes to fintech bank acquisitions and kind of integrating teams and things of that nature. But Stefan, let's go back to you. Like, what do you think are the primary cultural and technical, pain points for banks and fintechs to work through?
Yeah, so as I said before, so what we see is that, when you, as an innovator, like you want to be fast, you challenge, you don't accept the status quo. You want to do things differently. You try every different angle, and that's how you succeed. So you don't give up. And I think when we look at the type of stuff we have, like we're looking for hungry people. We're looking for people who really think deep, who go deeper, who like really want to take the next step and see and understand what we can change and do better for customers. And I think most important, and that's what is interesting to see, is like when you look at innovators and incumbent banks, like a typical reaction, and I've seen that multiple times, like a typical reaction of an incumbent organization, whether it's a bank or a different industry. If there's an opportunity coming up, if there's a challenge, the first reaction would be, do we have the right expertise, the skills? Do we have that in-house, or is this maybe something where we need to partner with someone who's out there who can really drive this, who can support us? Whereas like the innovator would have a different approach. Like a typical reaction of the innovator is like, okay, great, we understand the challenge, we understand the opportunity. How can we do it ourselves? How can we find the right solution ourselves? So in other words, there's a different view on challenges and opportunities from an incumbent company and from an innovator, and bringing those two sides together, that's probably the challenge. But again, like in N26, having literally both genes in us, it's interesting to see how we play with that, and it obviously works.
Rita, coming to you next. So what do you think where are banks and fintechs the furthest apart when it comes to culture or technical ability, and how do you go about kind of bringing them closer together?
So let's start with the culture. And the culture we really have, and depends what stage the fintech is at, right? But if we think about fintech, which is around the Series I, they're still pretty small, they're still pretty nimble. So they used to make decisions really quickly. And also many times the team is mostly tech savvy. So they're mostly technologies, or they have some technology background. While if you look at organization like HSBC or any other big bank, things do take a bit longer. So we have many more stakeholders, and also we'll have a different set of stakeholders that will be involved. Some of them will be technology, some of them will be business. So really in terms of how do you bring those two different worlds together is really making sure that both understand the differences between each other's, and also from the startup world, making sure that they bring someone that can translate the jargon, the technology side into the business value. So many times I have been in meetings where we have a really good startup and they come in and have a conversation with someone from our side, and the product or the solution is a bit lost because they're not talking the same language. So it's making sure that on both sides we have the interaction, or that you have someone in the middle that can make that interaction. And it's also explaining a bit on both sides. It's going to take a bit longer. So for example, startups, I think they're much more aware that procurement takes a bit longer in a big organization like HSBC. So it's sharing with the startup, for example, from HSBC sides, how long does it typically take? What are some of the different steps? So that's the two main things from the culture sides. And then from the technical side, I think Stefan was referring to initially, from a startup, it's also making sure that they think about what are some of the considerations that we will have as a big organization when we scale. And two interesting examples. One of them is with cloud. So many companies a few years back, they started being cloud only, which is great. It's a very innovative solution. Now, for a big organization like us, we also need to have an exit strategy, right? Or we'll have countries where we're not going to have clouds for regulatory reasons and other reasons. So how do startups think about that? How are they going to integrate with us if they're going to be our partners? How are they going to help us with those different views? And the other one is, for example, with AI technology. The AI solutions, they're really innovative and I have seen really smart companies. But from a big organization or a regulatory organization like HSBC, we always need to make sure that it's understandable, that it's auditable, that people, they are not data scientists, that they understand. And that's something that sometimes when we have the startups as well, they don't think about those sides. So it's really when you start partnering, because really the goal from a startup many times is how do they scale up? How do they increase? You start thinking about, okay, if you were a bank, a regulated bank, what are some of the considerations that you need to have? Because to be our partner, we need to work together to make sure that those considerations are taken care of.
Okay, so I guess over the past few years, as kind of bank fintech partnerships became just the norm, a lot of people in the industry had really big hopes for them, right? They were going to increase financial inclusion. They were going to make banks faster and more efficient. So my next question, Marielle, coming to you first, is, I mean, where do you think that partnerships have fallen short of expectations?
Well, I'm glad you listed, expanded financial inclusion as something that people were, hopeful about, because I think that unfortunately does not appear to have really been the case. The majority of partnerships appear to have perhaps provided a faster, cheaper, broader array of more tech-enabled solutions to the same already included customers that the bank was already serving, as opposed to opening themselves up to a broader set of clients. I was interested in Mark's remarks about the war for the client. We had been really very hopeful that banks could be introduced to quite lucrative clients of the fintech, and then continue to serve them once the partnership. And that has really not been the case in most instances. There is one thing, though, I feel like I'm kind of trashing the banks here, and I don't necessarily want to do that. I never dreamed I would be pointing to the formal banking sector as this bastion of gender diversity, but it actually is much better than the fintech sector, which has really, appallingly low levels of women, and amongst founders, amongst staff, only 14% of directors of fintechs are women, and most fintechs only have a single woman director. So at least, I think banks have kind of gotten the message of the value of diversity, that have processes and programs in place to build more women into the pipeline. And so that would be an exciting dimension, I think, if that element of banks and the management of banks and the war for talent that banks are constantly fighting, if that could get shared with the fintech sector as well.
We've had a really good question come in from the audience, so I'm going to put this one to Rita and Stefan. But what regulatory change would you like to see that would strengthen fintech partnerships?
So obviously, regulatory requirements from the regulatory bodies are literally increasing, and that's good. So because we have to make sure that fraud is being limited, we have to make sure that customers feel safe, and we have to make sure that the money and the trust customers put into our banks are treated in the right way. So in other words, I don't think from a regulatory perspective, I would expect the regulatory body to change anything in that sense. I think it's more about that, being a bank and also innovative fintechs. I think it's very important, especially for the fintech industry, to really understand the regulatory requirements, whether we're talking about outsourcing, whether we're talking about KYC processes. I think it's interesting to see that over the last years, typical if a neobank starts, the focus is on growth. The focus is on winning market share. The focus is on bringing out new products, new services as quick as possible. And some of the neobanks, focus too much maybe on growth and not really looking at the regulatory requirements. And I think if you ask me, I think it's more about making sure that as a bank, whether you're like an incumbent bank or whether you're a neobank or an innovator, I think a balanced approach on making sure you grow in the right way, you offer the right services, but doing this in a very, very regulated and correct way, making sure you meet all the regulatory requirements. I think this is the key. And in N26, I think we found a very good balance in making sure that on one side, we're able to grow, we're able to innovate, and we're able to offer great and new services and products to customers. But on the other side, also really meet and even help together with the regulatory body to lift up the regulations in terms of making sure frauds and money laundering is being kept as minimum as possible.
Okay, switching gears a bit, I think the predominant narrative about banks and fintech has been just like the versus, right? Banks versus fintech, but increasingly financial services is expanding, and you're seeing big tech companies, Walmart opening checking accounts, which is a retailer, or Google, Amazon, things of that nature. So, Mark, how are you thinking about these kind of non-bank entrants into the financial services space, and is that competition or another opportunity to collaborate?
Well, I think most obviously it's both, okay, because you've got very large companies in a variety of different sectors who are leveraging their established footfall, their established consumer and or customer relationships, and either vertically or laterally integrating, whether it be through payments or whether it be through checking accounts, the supply of credit, frankly, point of sale finance, et cetera, is another example of it. But what that industry, I'm thinking particularly of buy now, pay later, tells you is that actually, the engineering and underwriting capability is not inherent to the businesses that are leveraging the service. And so the fact that you can expand a very well and long established business with potentially quite an historic business model and leverage digital partnerships to grow, whether in banking, directly or indirectly, is true today. And you can see a number of case studies that have gained tremendous scale globally, and particularly in point of sale finance and payments. On the other hand, so what do you do about it? Well, either you provide a service that will add value to established companies, and we've seen that, or you try to leverage some of the qualities that perhaps are problematic about these bigger organizations. There's quite a lot of data kicking around, for example, about trust. What sort of companies do people trust? Do people trust companies that they use for, I don't know, if you like, internet search engines, for want of a better sort of catch-all descriptor? How much data do you want these companies to have about you? So they have your browse data, We already know there's been a number of challenges, shall we say, to put a nice word on it, in regard to data sovereignty, data protection. Do you now want them to know precisely what you're spending your money on, everything about you? And the data would say not. So when you think about building a proposition, I wouldn't rule out the importance of trust. And I wouldn't rule out the importance of confidentiality and privacy, and the idea that there should be walls between certain parts of your digital ecosystem, certain parts of your life. And you can leverage that. But ultimately, you're talking about lots of companies now wanting to leverage either in-house, inherent, and/or partnership digital services, frankly, to expand their reach and to broaden their relevance to their customers. And that's probably on balance a pretty good thing for fintechs and for innovators.
And Mary Ellen, I guess as more non-banks, big tech kind of enter the banking sphere, do you think that will accelerate efforts to improve financial inclusion, or will it have less of an impact?
Just almost an easy answer. Slowly, more women around the world are getting a smartphone in their hands. They're still, 16% less likely to own a smartphone, have access to mobile internet. But the first thing that woman does is download WhatsApp. And more women's businesses are doing business on that app. So there is a certain amount of, I think there's a lot of interest, a lot of potential for going directly to that, to those platforms rather than banks, where those same women very often tell us, we don't really feel like the bank is for us. There's a real emotional distance that we often are told about with women and mainstream banks. So again, I do think those platforms that women get comfortable with, have more confidence in using, could be a bridge to the formal sector if those partnerships are done right. I love the fact that we've gotten around to trust, because I think that's really what's at the heart of it. And it's always been really fascinating. The Edelman trust barometer is something I'm always reading, and the financial sector always comes in sort of dead last, but digital is somehow seen differently. Even digital financial services are trusted more than the sector at large. So I do think there's a real opportunity to bridge to the formal sector, to the formal banks.
Something that we talked about in an earlier session at this conference was this phenomenon of copying and pasting, right? A lot of the incumbent banks have gotten very good at seeing a product that a fintech creates and offering it to their clientele, whether it's overdraft protection, getting your paycheck early, or things along those lines. So I was wondering, as kind of the product differentiation, as a products offered by banks and fintechs kind of look more similar, what impact do you think that copy paste phenomenon will have on innovation in the industry? Will it accelerate, or will it end up being stifled if fintechs are having a hard time differentiating? Stefan, I'll put that one to you first.
So maybe to going back what Mary Ellen said, we see all these, Apple, Google with Apple Pay, Google Pay, Amazon. I mean, they're coming into the market, so they're innovators. They're like the ones who lower the barriers for financial inclusion, but they're also the ones who fuel and who enable the digital transformation. So in other words, without all the cloud offerings from companies like Google, AWS, Microsoft, and so on, incumbent banks wouldn't be able to really participate in the modern and neobank market. So in other words, I think this has a big impact, and the technical services and cloud services. That's what fuels the digital transformation. That's what enables incumbent banks to really take part in the new way of banking. And the one who profits in the end is the consumer. So in other words, we are lowering the entry barriers. We are increasing the way of doing business. When you think of it, like as a foreigner, it used to be really difficult to open a bank account in a different language. I remember when I was studying in Scotland and wasn't really that good in English and all the different terms in banking in Scotland. So this is so much easier today, where like foreigners can just bank in their language. Those with like vision impairments can use screen readers. Like with limited mobility, you don't have to go to a branch anymore. So it's very easy. Mary Ellen, as you said, like the first device someone has now is literally a mobile phone. It's WhatsApp. It's downloading the app and very quickly have access to a bank like N26 and do like all your financial services and business. So I believe this is has a big positive impact on the consumer, and that's what we are. That's what banks are for. Like, we want to make sure that consumers have the best financial services and the best financial experience and really love banking, and we're trying to be part of it.
Okay, before I move on to audience questions, was there anyone else that wanted to weigh in on that question in terms of what does banks copying a lot of the products that fintechs have brought into the market do for innovation as a whole? Okay, we can move on to audience questions. So someone in the audience asked, many fintechs leverage public cloud infrastructure and technology to a greater extent than traditional banks do. How much friction does that create when collaborating? Rita, what's been your experience kind of navigating different levels of cloud integration?
So we are a big bank, right? And we have different teams, and also we have different countries. So we are used to have different solutions as well, depending on the country that we are. So let's say that, for example, one of the providers only uses one of the cloud providers, then that's okay. Then we'll have to work together and say, okay, what are the different options? What happens if that cloud provider, for example, has lockdown and they go down? So it's really just working through the different options with the vendor or with the fintech. And I can tell you that many times actually the fintechs are quite willing to learn and to have these conversations, because that also means that they are improving their product. So next time that they go into another partner, a big bank, then they already have some of the answers to those questions as well. So I think in those situations, it's really just working through some of those considerations. What are the options available from both sides? And then if needed, then we either build together or they build something themselves that it's available for us.
Okay, and the last time that we held this conference, we were facing a very different economy, and no one was talking about. Back then, inflation was transitory, right? And I think we're having a much different conversation now. And fintech valuations have declined quite a bit. So how is that changing the dynamics between banks and fintechs in this moment? And kind of how do you move forward? Mark, do you have a view on that?
I think it's a very interesting time. So what you've seen, and this is a generalization, so forgive me, but one of the big dividends that fintechs have brought to banking and financial services is that they have delivered a better customer experience, almost universally, faster and easier customer experience, especially when it comes to payments, transactional banking, FX, point of sale finance, etc., etc. And that's not to be undervalued, because the reputations of the big banks hasn't been particularly strong in that regard. And you don't have to take my word for it. Just go to Trustpilot and you'll find out what people are saying in a fairly visceral way. On the other hand, if you actually look at how banking works and how banks make money, they make most of the money by lending, and overwhelmingly. And one part of their lending machine has been impaired in a sort of QE, low interest rate environment, and that's if you like, the value of the free float, the liabilities that they sit on but don't reward customers for on transactional bank accounts and checking accounts. And now that's beginning to drive the economics of the banking model again, and everyone's getting very excited, because you can see good times are here when it comes to lead lag. So I'll put up the interest rate for borrowers, but I'll lag. I'll keep as tight a grip on the interest rate for savers as I possibly can, and I'll put it up as slowly as I can, if at all. And so you're going to see the profits of the banking industry bow and grow very, very substantially. And we've already seen that in the first quarter results. Against that backdrop, you've got some concerns, particularly about unsecured lending into a credit downturn. And that could be very challenging for unproven models or models that haven't gone through the cycle. And it'll put a lot more pressure, arguably, on some of the fintech models or some of the platform models than it will on some of the banks, who frankly have got decades and decades of experience of underwriting. And most of their revenues are thrown off balance sheets that have been fairly stable for decades and decades. So it's interesting to see how this dynamic will play out. I think there will be a consolidation in the industry. There will be marriages of companies that have complementary capabilities, where you've got customers and platforms married to banks, because ultimately banks are going to be the powerhouses, I think, for the foreseeable future. But against that, there's no going back. Fintech has changed and will continue to change banking for good, inexorably, and that is to be celebrated and to be embraced. And it's very tempting, if you're a big bank, to think that this too will pass, because you've pretty much seen all the other crises gone and you're still here, but you forget that you took a lot of taxpayers' money to be here, and that once upon a time, one of these fintechs is going to have your lunch. I hope I'm there to see it. In fact, I hope I'm there to lead it, but maybe that's a bit of a pipe dream. On the other hand, a rising rate environment is going to flatter banks. What it won't do is change fundamentally who they are and what they are. That's a much harder thing for them to do.
Okay, thanks, Mark. You anticipated one of my final questions, so I'll put this to the rest of the panel, because unfortunately we're running low on time, but I'd like you all to make a prediction. Hypothetically, right, where we have a global recession. I don't have my crystal ball. I'm not saying we're headed towards a global recession, but hypothetically, that's the case. In your opinion, what does the banking industry look like on the other side of this economic cycle? Rita, I'll start with you.
So if you look back, I think that's what Mark was hinting as well. If you look back at the other recessions, there was a lot of different merge acquisitions. And as I guess any other recession, if it does happen, we'll probably see very similar. So you'll see banks acquiring fintechs, you'll see different fintechs also acquiring different fintechs, or even just coming together for a stronger proposition. So you'll definitely see some changes in that regards. I think when we come out, there's definitely going to be potentially less fintechs, but stronger fintechs and stronger startups. And I think the innovation, it's going to be continuing, right? So new innovations, new ideas, and new propositions will definitely be continuing in the industry.
Okay, and Stefan, what about you? Do you see fintech potentially growing vertically in terms of becoming more specialized in retail, or horizontally and adding other different kinds of financial services, as you saw with the great financial crisis?
Yeah, I agree with Rita. I think we will see a consolidation on the markets. That's for sure. But I also believe that in the end, the customer is the one who profits from it. So it's the consumer who will have better services from the bank. I think we'll see that the digital transformation will be even more important, to be leaner, to be faster, to really offer the best service at the lowest cost. And that simply means to move from a branch system towards digital banking. So in other words, I believe there will be consolidation on the market. You will see strong players further growing. You will see some of the incumbent banks really moving more and more into the digital transformation. And in the end, the consumer, the customer will profit and will have faster, easier access, low barrier products, and a better experience in online banking.
Okay. And Mary Ellen, since a lot of your focus is on financial inclusion, and I think one of the good things about this cycle is you've seen more companies talking about kind of serving underserved populations. Do you think a lot of the fintechs or banks who have shifted towards this focus can keep that commitment kind of in darker economic times?
Well, just trying to remain optimistic. The banks that have done it as part of their CSR, or it's a sort of bank foundation initiative, will be the first to drop that. And so if they really do have a commitment, if there may even actually be a regulatory commitment for them to be reaching out to that community, fintechs are going to be a great way for them to do that. We're always advocating for, banks to be bringing this work into the business, not to keep it off on the side as a CSR. Fintech could really be a great way for them to do that. And in these hard times, banks start putting the ramparts up. They start charging fees. They start sort of losing that trust with clients that, with any luck, the fintechs will be able to retain. So it could be a real win-win situation coming out of your proposed recession.
Yes, yes. I'm not saying, again, that's a forward-looking statement. All right. Well, unfortunately, we have to leave it there. Thank you so much for our panelists for joining us, and for the audience, don't move. We have our next panel with Liz Lumney on what do consumers really want from their banks. Thank you so much.